Hi guys, and welcome to this chapter in the online forex trading course. This chapter is known as Fibonacci trading. Some of you guys who are already familiar with trading already know what Fibonacci trading is. But for those of you who are absolute newbies to forex trading now, Fibonacci basically is a guy, he's a mathematician who had these theories about the way life, the sequences in which life revolves, okay, in terms of nature, in terms of the universe, just a whole lot of mathematical BS basically. However, somewhere along the line, market players, traders, professionals in the stock market were able to find a way to adopt Mr. Fibonacci's mathematical formulas to the market, okay? So basically what Fibonacci says is that everything in life has a sequence, okay? I want you guys to please read up on Fibonacci. Just read up on it. It's really interesting. The book makes it really, really interesting because I want you guys to actually understand. Forget about these numbers. They're not asking you to calculate anything. Just read it. Even a 12-year-old can understand this. Trust me. Just read it, okay? So that you have a background knowledge on Fibonacci. Anyways, as I proceed, so Fibonacci basically has this theory that everything in life happens in a sequence. Now, traders were able to now, take that sequential mathematical formula and apply it to the market to see how possibly they can use Fibonacci, the Fibonacci mathematical sequences to their advantage in the market. And I have you believe that they were quite lucky with that, because what you have in front of you right now is, what a Fibonacci looks like on the market. So Fibonacci basically, the way traders use Fibonacci is very, very unique, but very, very easy to understand. Now, I'll take you down to the left side of the ebook on this side here, okay? And Fibonacci basically talks about, Fibonacci in the market basically talks about the amount of pips, the amount of price movement the market is going to pull back into before we continue going higher. So basically, as you can see, this market started running all the way from here, okay? This is just swing low. We pushed all the way to swing high. As you can see, it got to a point whereby the market started the market now became somewhat exhausted. Okay? The market became somewhat exhausted. Now, ideally, okay, the market is supposed to continue going to the upside. But the thing about the market is the market doesn't just rally all the way to the upside. We move in waves, okay? Now, this market moving from here to here probably is getting a little bit exhausted. So your duty as a trader is to wait for the market to pull back for what they call a retracement, okay? And then head higher. So that's how the market works, okay? Up, down, up, down, up, down, okay? So we're expecting this move. So we want to see a corrective wave from this current impulse leg, okay? So this is what is known as an impulse leg, okay? So as you can see, the market pushed all the way to the upside, and then we started to look like we probably had some red candles, okay? So your duty as a trader, if you go back to the previous chapters in this course, you will hear me talking about how you only want to trade the trending markets and how the trending markets don't move in a straight line, okay? Now, what Fibonacci does for us is it helps us know when to hop onto that trend, okay? When to hop onto that trend. Subsequent chapters from now, I'll show you guys real life examples on how to combine all these tools together. But I want you to have a fair understanding of what Fibonacci is and what it does, okay? So Fibonacci helps you calculate, okay, the amount of moves from all over. So what Fibonacci does for you is that Fibonacci helps you measure, okay, from swing low to swing high. So if you look on this side, you notice that there are some form of levels, as you can see here. Now these levels represent what they call Fibonacci retracement levels. So at this point right here, the top one is usually the 23.6 retracement, and after that you have what is called the 38.2 retracement, and then you have the 50% retracement, and then you have the 61.8, and then you have the 76.4. Now don't get scared, okay? Just relax. Now what all these numbers represent basically is the percentage of this impulse leg, okay? Now if you draw from here to here, somewhere in the middle here is known as 50% of this move. From here to here, 50% is probably somewhere in the middle, okay? That's all what Fibonacci does, okay? This place is 23% of this entire move. Here is 32%. Here is probably looking like 50%. Here is looking like 60%, and here is looking like 72.8% of this entire move, okay? So it helps you calculate the percentage, okay, of pullback that this market is possibly going to experience before it heads higher. Now, as a trader over the years, I have, tested all these Fibonacci levels, okay, and I realized that the most accurate ones are between the 50 and 61.8. You might want to write this down, okay? The most significant levels on the FX Fibonacci tool is the 50 and 61.8. Now, let me take you over to a more appealing example. You see that this market was trading all the way from the moon. We're just collapsing down into the earth. We pull back, we collapse, we pull back. Now you've been able to identify that this is a downtrend, but you're asking yourself, how do I take advantage of this downtrend? That's where Fibonacci comes into play. So you see how this market, the impulse leg, clearly started from here. Impulse leg from here to here, clear, okay? Impulse leg from here to here, clear. Okay, so you now take out your Fibonacci and draw it. From there, I'll show you. I'm going to give you a real life example after this so that you understand where to get the tool from and how to use it and how to draw it. But let me just explain with this example, okay? So basically, we're trying to draw from the most significant swing high to the most significant swing low. When we draw it from here to here, all these levels automatically come out. When it comes out, your duty is to wait for this market to retrace back into one of these levels before you hop on that trend. The reason being that is because most people say you want to sell when the market is falling and you want to buy when the market is going up. That's absolute bullshit, because just imagine you realize that this market is collapsing and then you sell here. If you sell here, this market starts going against you. You're like, this shit doesn't work. That's not how to get on a trending market. You want to wait for the sell-off to happen. Wait for the sell-off to happen. Once it's done, once the sell-off is pretty much done, then you now want to wait for the market to retrace back into a Fibonacci level. At the point in which we hit the Fibonacci level and then we're about to continue going back down, that is where you want to now enter the trade and follow the trend all the way back to the downside. That's exactly how it's done. I'll explain to you guys in detail when I'm talking about the examples and stuff and whatnot. And ladies and gentlemen, that's basically Fibonacci. So I'll take that again. You want to draw it from swing high to swing low. Wait for it to pull back into either the 50 or 61.8 retracement. When the market is about to sell off from those regions, and then we start to fall all the way back to the downside. Now, let me just briefly explain to you why professional traders have adopted this, okay? And why, the thought process behind this for an average retail trader. Good. Now, the professional traders that work at the big banks, this is what they do. For instance, let's say this market has sold off, okay? They're not going to start selling here. The banks they first of all identify that this is a downtrend, but they want to get into the best price possible. So what do? They draw their own Fibonacci, and then they wait for the market to pull back, at least give them a decent price. Since they couldn't get in here because they didn't know that the market was trending just yet. Since they couldn't get in here or here or here, they want to wait to pull back to at least 50% of this move. Somewhere in the middle here, they will love it. So they will use the Fibonacci retracement to measure what 50% of this impulse leg, where it stops. Okay, so at least they can take advantage of this move at a very good price. Might not be the best price, but a very good price. So you as a retail trader, you want to be thinking like the professional traders on Wall Street and Canary Wharf. Okay, guys. So you wanna get in where they're getting in. So you too, when the market has collapsed, you want to draw your Fibonacci. Okay, wait for it to pull back into the 50% or slash 61.8 retracement level. Wait for a sell-off to start happening from there, and then you want to sell, and then you want to catch the absolute wave to the downside. All right, ladies and gentlemen. So that's basically Fibonacci for you. I also want you to look into Fibonacci as the book is trying to say that Fibonacci is not exactly foolproof and what have you not. Yes, not every time Fibonacci works, but I kid you not, 80% of the time, if you're using Fibonacci in conjunction, in continuation, in confluence with the already existing trend, you are most likely to get Fibonacci right 80% of the time. Now, moving on, this is where we, excuse me, I have to drink water there. Give me a moment. Let me pop out some real life examples for you guys. Now, ladies and gentlemen, this is a real life situation. As you can see, this is the US dollar, Canadian dollar chart. Okay. And what you have in front of you is basically this really nice impulse leg. So I'm just going to highlight this impulse leg for you guys so you guys can see. This is pretty, it's a really nice impulse leg, as you can see. Okay, so now you let's say you were unable to buy here, you were able to, most likely you are probably unable to buy anywhere because the market will just be, that's how the market works, it just keeps on going. But then, okay guys, then we've been able to identify that there's trouble here. What do I mean by trouble? We've been able to identify that, okay, this area right here is acting as a form of resistance, okay? This area right here is acting as a form of resistance, all right? And then after this market resists here, we just start coming all the way down. We just start coming all the way down. Now, don't forget, okay? This is the impulse leg. Okay, I'll just extend this here. Put this on top of here. This is the impulse leg, okay? Impulse leg all the way to the upside. We hit the resistance level and then we start pushing all the way to the downside. Now, we've already been able to establish that this is an uptrend. We see the retracement. We know that this market is going to continue going to the upside. But how do we know when to get in? Where and when to get in? Very simple. Simply bring out your Fibonacci retracement. Bam. I'll do a chapter in this course that talks about how to use all the tools. So just relax. Okay, where to find them and how to customize them. Okay, so simply draw it. Okay, I'll take that again. So this is swing low in an uptrend. You want to do because the move started from here. Okay, the move started from here, so you want to calculate it from here all the way here. So just simple, just click on your Fibonacci, click swing low, and then drag all the way to the swing high. Now swing high is here, the top place. So once we start retracing and then the market starts acting all nasty and starts coming all the way back to the downside. So now we've been able to draw Fibonacci. So let me just take all this stuff out real quickly so that you guys have a clear understanding of what exactly I'm about to do right here in a moment. Perfect. So I'll take my Fibonacci, draw it from swing low to swing high. Okay, I just want to extend it all the way to the right hand side just a little bit. Good. Just a little bit to the right hand side so that we know exactly where this market is going to come into, so that we know where exactly to buy. Okay, this is a tool that helps you to know where to buy, okay, or where to sell. So you guys better pay attention to this. So I've drawn my Fibonacci very well, and then just watch what happens when the market comes in. Watch out for this. Mind you, this is the 50 and this is the 61.8 retracement levels. Okay, So just watch what happens. The market comes, as you can see, it's coming into our level. It's broken the 50. That's why I said between this 50 and the 61.8. This region is the region of, this is the holy grail region, literally. So you see we're coming to there, and then we're falling. Just be extending this as we go. Okay, as you can see, we've come down into this C, this zone, okay? And then at this point is where you want to buy. At this point is so you were not able to buy. So you weren't able to buy here because you didn't know that this was an uptrend, right? But then the market gets somewhere and starts retracing back down because it wants to catch some of his breath before it heads higher. But you don't know where. You don't come and buy here, because imagine if you bought here, the market starts falling, you buy here, fall. But notice what happens when you buy in the 50, between the 50. Actually, I need to stop calling this the 50 and 61.8. I'm going to call it the Willis zone, okay? So I named this level, this particular scenario after myself, so I call it the Willis zone. So between the 50 and 61.8 is known as the Willis zone, okay? So we come into the Willis zone, yeah, and watch what happens. The market starts to play around, and then look what happens. Mind you place the buy trade, and then see how this market pretty much rallies. Takes it a while, just like an aircraft trying to leave the ground, but look what happens. And then we just start to push all the way to the upside. Can you notice that we've even taken out the previous area? So imagine if you bought here, these pips are well over 300 pips. So even if you were risking 10 pounds a pip or $10 a pip, you would have made $3,000 on this move alone. $3,000 on this move alone, just because you are able to identify the swing low, swing high, and you knew how to simply click Fibonacci, draw it from swing low to swing high, waited for it to come into the Willis zone, and then you made $3,000 US. So ladies and gentlemen, that's exactly how you use Fibonacci. Fibonacci can also be used in smaller pullbacks. So if you realize that this is A, B, C, D, this is a move, impulse leg, pullback, push to the upside. But even this push to the upside, let's try and see what's happening. Okay, so while we bought here, because this was the Fibonacci, this is where the market came to the Willis zone, we bought here. We also notice that this market, even when it's going up, anytime the market goes up, we always do that sequence, always do it. And you realize that even with that sequence, you notice that we always push up and pull back into Fibonacci. We always push up and pull back into Fibonacci. As you can see, we always push up Now this one isn't so accurate because we pushed all the way downside, took out some stop losses, but look, we pop back up, and that's how it goes. So even in smaller waves, okay, the market still respects Fibonacci movement. So yeah, all right, ladies and gentlemen, that is Fibonacci for you in a nutshell. Draw from swing low to swing high, Fibonacci, swing low, swing high, Fibonacci, swing low, swing high, Fibonacci, swing low, swing high, Fibonacci, and stuff like that. Now, if you have any questions, I'm going to show you. I'm going to drop a YouTube link in this aspect of the course, whereby, so there's this YouTube video I watched that helped me basically understand Fibonacci trading a lot more. So I'm going to take you there. It's a YouTube. This guy really explains it very well. So I'm also going to direct you guys there. So the essence of this course is not to act like I know it all or I'm able to teach it best. So if I have better resources, something that can also help improve your understanding, why not? Okay, so I'm going to direct you to that YouTube link right now. So this is Tom, my very good friend. Tom has an outstanding video on, how to use Fibonacci retracement, like literally changed my perception on Fibonacci trading. So ladies and gentlemen, I implore you to please go and watch this video. Now, I was thinking of maybe downloading the video and putting it together on the course, but no, it's not exactly my content. So I'm going to leave a link to this. When you're done watching my video, ensure to watch this video because it's really, really, really good. If you want, especially if you want to have a very, very good understanding of Fibonacci retracement. Literally, Fibonacci will tell you where to buy and where to sell. All right, guys. So his name is Tom. Just simply go on YouTube and type how to trade Fibonacci retracement for money in Forex. Once you see his little nice chubby face, there you go. Click on it and then you watch the video. All right, guys. That's it for this aspect of the course. This was Fibonacci trading, and thank you for watching this chapter. All right, guys. See you in the next chapter, and God bless.